So let's get to what I've chosen as the stock of the day. And this company is actually leading the market higher in terms of percentage change. And it's in a sector that has been so unloved. We did see a consumer confidence read yesterday showing some green shoots after the RBA left rates on hold. Drum roll, please. The stock of the day is Super Retail. So it says that it's been a positive start to FY27. And we know when we get these retail reports coming through that it often is all about the trading update that we get, not so much the backward-looking results. So it says that like-for-like sales growth came in across the group of 1.5%, total sales growth of 3.5% in those first 7 weeks of the financial year. However, of course, it recognizes that the Middle East war, rising interest rates, and the pressure on the housing market continues to dent consumer sentiment. Super Retail says that it will continue with its transformation and plans to open 18 stores in the full year. Now, for FY26, Super Retail reported full-year sales up 3.2% to $4.2 billion. Like-for-like growth reached 1.8%, though profit before tax declined 7% to $306 million. Let's get a view on Super Retail. Kai, there was a time the new folks at MPC were completely avoiding the retail space. Are you getting the sense, though, that perhaps the bottom's in?
Not quite. Well, I think our view is still not that positive on the retail sector. But again, this example today with how Super Retail Group reported, there's so much negative expectation on that consumer discretionary sector, and any good news is good news. So, well done. They reported fairly well. It's up about 15%. Obviously they got two large components in their business. Oh, well, they got four components, but the two large ones are super cheap auto, which is relatively defensive, and it's just been plugging along, so delivering more returns. But Rebel Sports actually surprised a little bit on the upside, and that was fairly positive. So I think the market's taken quite it's quite a positive surprise.
Okay, so what would you do with Super Retail? Buy, hold, or sell? Imagining that you don't own it.
If I didn't own it, I would. I'm still on the fence, but I would hold if I was a existing shareholder. But I don't have super high conviction in the retail sector.
Okay, Howard, Super Retail, is this a quality retailer in your view?
Oh yeah, very much so. I've been in Australia now almost 40 years, and retail's been doing it tough, according to everything that I hear. Ever since I arrived here, I don't ever remember a time when retail said it wasn't doing it tough. But when you consider there are thousands of retailers, what that really means is, as a sector overall, it's very competitive, hence they're doing it tough. But what happens if they do it really tough is some of the retailers go broke, and the ones that don't go broke pick up all the business that the ones that did go broke aren't able to pick up because they don't exist anymore. And Super Retail, being a company with a strong balance sheet, they've almost always got no debt. This particular June balance, they've got a little bit, but not very much at all. They are always going to benefit by their competitors struggling. So as long as you're selective enough, you can do very well out of retail, irrespective of the fact that the sector's doing it poorly. I mean, if you look at sports teams, tens of thousands of people play cricket. I played cricket when I was younger, but if you selected me to play for Australia or South Africa, it was at the time, you wouldn't be doing a very smart thing, because while I played cricket and I really enjoyed the game and understood the game, I certainly wasn't anywhere near the sort of batsman that Graham Pollock was, despite using the same bat, playing according to the same rules and having the same game. So Super Retail, like for instance JB Hi-Fi, very well run retailers, they will tend to do okay when everybody else is doing it tough. Now, in terms of their report, it was only an okay report. It wasn't that they did wonderfully well, but the market was expecting them to do terribly badly, because the market lumps everybody together. It's like saying everybody's an equal cricketer, everybody's an equal AFL player, everybody's an equal everything. We know that's nonsense, but people do that with markets. If retail's doing it tough, it must mean all retailers are doing it tough, which is of course crazy. So its share price rocketed. Where would I stand today? Well, a few weeks ago, I thought it was terrific buying. At the moment, its share price has now gone up so much that I'd say, well, it's a good retailer, hold it and keep it in your portfolio. But you probably don't want to be paying today's prices. You can buy super retail periodically at a PE of less than 10. Pretty much every year its PE has dropped to less than 10. So you're only paying 10 times earnings. At the moment, it was 12.7 overnight. It's probably more like 13 and a half or so today. So great company, hold it if you've got it. Don't rush out and buy it. Wait for when everybody says, oh, the super retailer is going to be doing badly.
Okay, thank you, Howard. That's the counter-cyclical strategy there.